Good morning, everybody. Welcome to my trading game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. As always, folks, we're going to focus on charts and probabilities. No BS, no hype. That's the way we do it here at verifiedinvesting.com. So last week, we had the Federal Reserve announcement. We had a big meeting between Trump and Xi, and we also saw mega caps reporting earnings. Now, the mega caps are generally done until NVIDIA a few weeks from now, but we do have big earnings like Palantir at the end of the day, right after the market closes today. Let's jump right into the charts and see where things are trading. If we take a look at the S&P futures, we are trading slightly higher today. So again, this is your action from Friday. You can see early in the day, we saw a big sell-off, and then late in the day, we came back with a little bit of profit taking at the close. All in all, we saw a flattish type day on Friday on the markets. Now, couple things, continue to monitor the early selling, okay? When you see selling in the first half of the day, it's generally driven by institutions. The reason this is the case is because they are going to be the ones unloading when there's the most volume in the market, right? There's no point in them trying to sell their huge amount of shares when the volume gets light on an afternoon on a Friday. So in general, when you see big selling early and then the markets float back up, that's because the institutions are dumping. And then what you see is, again, they shut off the valve, they shut off the sell valve, and then the markets float back up because retail continues to leg into the market, right? Retail is looking at this market like it cannot break down. It won't break down. I disagree ultimately, as you guys know, but that's the way retail is feeling right now. All right. Couple things we have to go through. Number one, we have to go to our weekly chart on the S&P 500. This was absolutely remarkable. This is the one thing I said in Friday's My Trading Game Plan. I said we must be watching this parallel. All right, this parallel, again, your low from March of 2020 through the bear market lows to the liberation sell-off lows. And that line dragged up in a perfect parallel to our bull market from 2021. And look at what we had here last week. Now, this is not an official topping tail per my calculations, but it is still within the band of the parallel. And that continues to be a warning signal for me in trading, right? In other words, we saw the last time we were at these highs here. What did we see? We saw a nasty bear market. Each time we've been at the lows, we've seen a move up, right? A move up, okay? And a move up. And so essentially this tells us we have teeth. There are teeth here on this parallel. In other words, we have to take it seriously because, again, we have the moves off the lows and off the highs back down. That would imply the potential for a pullback here in the markets, and actually a pretty steep pullback if 2021's high and the bear market was any indication. In addition, we have that secondary trend line right here that I've been following as well. Again, connecting it right through that October 2023 low, through the lows in August 2024, the low in January 2025. We broke down with the liberation sell-off, and we've come back up. You can see it tagged it here, had a small pullback, and there we tagged it again. And look at that, how that candle pierced. Early in the week, we were above it, and by the end of the week, we sold off. Now, the next thing we got to talk about is the disparity that continues to get bigger and bigger. What am I talking about? I'm talking about equal weight S&P. So again, if you look at the equal weight S&P, which is every stock in the index is equally weighted. So it basically tells you the health of the S&P overall from every company's perspective versus the S&P 500, which is market cap weighted. So a name like NVIDIA that's $4.5 trillion, actually $5 trillion now, that is going to have a massive overbearing influence on the S&P, right? Because it's $5 trillion. I mean, there's a lot of companies you could combine and you're not getting to 5 trillion. So it really, the regular S&P, just like the NASDAQ 100, it shows us the health of the big players, the AI trade. But the RSV, which is the equal weight, let's flip over to that. Look at this here. And so the reason I'm bringing this up is if you look at the outperformance, the top line here, this is the S&P 500. This is the bottom blue line is the equal weight. Look at the disparity now that has been created. you have a massive disparity between these two of how far apart they are. In fact, you can look at the last time we topped out. This is how far we were, right? These two high pivots right here. We are way farther apart now. Now, part of this is the mere fact that the AI trade has gotten way out of control. All right. So again, just to give you some stats, 75% of the gains in the S&P 500 in the last 2 years are because of the AI stocks, right? So again, that's incredible. In addition, if you think about GDP, right? GDP, 90% of GDP growth is due to the AI trade and the CapEx spending. All right. That basically means that the whole rest of the economy, anything not related to the S&P or to the AI trade, has basically gone silent. There's no growth. It's essentially a stagnant economy. And I think we see this by just looking at how performance is, right? So not only is this chart absolutely remarkable, the difference, this is equal weight versus the S&P, and look at the divergence here, but then just look at stocks like Chipotle, right? I mean, Chipotle, if we bring up this, let me actually go to that chart here. I mean, look at the performance on Chipotle. Chipotle here again, fast casual used to be something that people could generally afford, and it's literally trading at levels not seen since 2022. Kava, one of the hottest names. Kava broke down last week below key support right down here, right? And again, we've seen this kind of come back in and go to multi-year lows as well. Even names like McDonald's, Procter and Gamble. I mean, you name it. These plays are near or at 52-week multi-year lows. But you know what's not? What's not at 52-week lows? This chart here, the NVIDIA chart, which tagged $5 trillion last week, right? So again, you really see the disparity when you look at NVIDIA versus a Chipotle or some of these other kind of, average economic trades that tell us how the US is doing, how the average American is doing. We really do see a disparity here. All right. And this is something that, again, it's known as crocodile jaws. All right. So when you look at the RSV, which is the equal weight versus the S&P, the crocodile jaws have opened up, right? And eventually the idea is they slam shut and they ultimately come back, meaning that the equal weight should eventually start to outperform. Now, listen, let's be fair. I don't see the equal weight going up if the S&P falls, but I do see them falling much less, right? You'll see a rotation of capital, maybe that the equal weight stays sideways while the S&P falls into it and rejoins at some point in the future. All right. And that's, by the way, that's one of the reasons, one of my bigger positions, Pfizer, looking at more of these defensive names. If I'm long stocks, I'm much more long the plays that have been defensive names, as I do think the market is due for that correction move. And I'm going to show you something in just a second that's going to blow your mind. But I just want to point this out. Warren Buffett this weekend, Berkshire Hathaway, they raised even more cash, meaning that they've sold more stocks. They now have $385 billion in cash just sitting there waiting to be deployed. And I still remember vividly in 2008 into 2009, when Goldman Sachs was near collapse in the financial crisis. Guess who came to the rescue because they had a lot of cash on their balance sheet? Warren Buffett and Berkshire Hathaway. And they got one of the sweetest deals because basically Goldman was going to collapse and be done with, like Lehman Brothers, if Warren Buffett didn't step in. Goldman Sachs basically gave them whatever they wanted. And I'm telling you right now, Warren Buffett is waiting. He knows this is coming, and he is waiting for that next situation to deploy $381 billion, and he will make a fortune again, just like with that Goldman Sachs investment. All right. Back to the charts. I'm going to show you something that's going to blow your mind. This is the semiconductors chart, right? The SMH. So this is essentially the AI trade. All-time highs last week, incredible run. We're going to flip to the weekly chart. You know what I'm going to do now? I'm going to flip on my weekly 200 moving average. So again, the line you're going to see appear is the weekly 200 moving average. Let's do it right now, and you'll see where I'm going with this. So here's your weekly 200 moving average. Now, notice on this chart, bear with me as I walk you through this, right? On this chart, we had this big run in 2020 off the March lows all the way up, and look at that high, and then we corrected. Here we had the next run to this high, and then we corrected. I want to show you something that's absolutely mind-blowing, and in my opinion, it tells me the semis are likely topping out here. We're going to do a measurement. What percentage do you guys think we got away from the semis in 2021 and 2024 before we corrected? Because it's the exact same percentage. Not only that, but how far are we now from the weekly 200? The exact same percentage. Let's look at it right now on the chart. So if we draw a line to the highest point from the 200 weekly all the way up, what do we get? We get about 102%. I'm trying to get it exact. All right. So we got 102% above the weekly 200 moving average, and then we collapsed. Well, now what about over here? What about over here? Let's do it right now. How far away did we get from the 200 moving average? 102%. Okay. So isn't that remarkable that it's now remember, moving averages work like home base, right? Essentially, you can, you throw a boomerang, right? You throw the boomerang, it goes essentially away from you. And then at a certain point, it turns back and comes back to you. I also love the rubber band analogy. You have a rubber band, you stretch it, you stretch it, you stretch it, you stretch it. You can only stretch it so far before it snaps back, right? That's the way moving averages work. Now, if we go back to this, does anyone want to take a guess at how far we are currently away based on last week's all-time high on the SMH? I'm sure you're all guessing it correctly right now. Look at this, guys. 102%. All right, now, just to summarize, in 2021, we were 102% above the 200 moving average on the weekly. We pulled back. In 2024, we were 102% above the weekly 200 moving average. We had a big collapse. Here we are, probability and logic, which is what verified investing is all about. What does this tell us? The odds are starting to favor a big pullback, not just a small pullback, but like we pulled back 45% in 2021 and 40% in 2024. So the odds are we're going to get a pullback in the range of 40 to 45%. Now, listen, these pullbacks took 6 to 12 months to pan out to their lows, but they topped out at 102%. To me, at least, when I discovered that, and you guys know, listen, some people play video games on the weekends, right? They have fun, which is cool. I'm all about that, right? Go have fun. You got to do what you got to do. But for me, charting and discovering this type of stuff is my video. That's my pleasure. And it sounds weird. Like, oh, how do you, that's like work, but it's not work to me. This is fun. This is exciting. I mean, when you can discover these things, I mean, when you play a video game, I guess if you're one of the elites, you can make money, right? You can do really well if you're really good. But for most of us, we don't make money playing video games. Generally, it's a waste of time in a weird way. Might be pleasurable, but it's a waste. At least in charting, when I discover things, it can make me hundreds of thousands or millions of dollars. And okay, all right, let me use my time more wisely. All right. In any case, folks, these are the few things that I wanted to discuss today right there. Remember, Palantir has earnings today after the close. This chart's very, very interesting here. We have this trend line here. I was putting in kind of my max move. If it really rips on earnings, 220 is your upside. But I'm very curious about this trend line right here. It connects these recent highs. Again, we'll see. This stock trades at multiples. So usually a stock trades at like 20, 30, 40, 50 times earnings. Palantir trades at like 50 times revenue. I mean, it might be closer to 100. It's insane, but it's been one of the hot stocks. So it's gotten this crazy multiple. At some point, if they show ever even a slight amount of a crack in the narrative here of their growth rate, watch out below. There is massive downside in the stock. Now, it doesn't mean it's today on earnings, right? They could just blow it out of the water and we go to 220. 220 is my max move upside trend line. But if they show a crack, if they don't perform amazingly well, this thing has massive downside over the coming months, folks. All right, let's go to gold. Gold today is getting a small bounce. Notice gold again is hovering right above our first target that we hit last week. So last week, first target achieved. Again, now it's kind of deciding, does it want to head higher to this level around 41 and a quarter where you see the sideways consolidation, or does it want to break lower? I think either way, probability wise, is at 75% per my calculations that we should be going lower. But again, we'll have to watch and see where that ultimately trades out. All right. So again, guys, I'll be keeping a very, very close eye on this and monitoring it. But again, gold pausing the last couple days. We got this one bounce, by the way, is the down day from last week. That was decent. We did see gold get a bounce, but it's just stalled out here. So we'll have to watch. Silver Silver, again, has the bigger parallel. This enabled me to call that top on silver. That was perfect. Again, just using this beautiful parallel. Notice how on the S&P 500 are right at the high end of that parallel. You see in this case what happened. We actually had a pretty sharp correction, kind of what I'm expecting on the S&P as well when we talk about that trend line. Just going back to that S&P, see the parallel here? So again, the parallels work. I mean, it's just amazing to me how you have these parallels and they just pinpoint levels. Now, listen, it's not 100%. I think we always have to remember probability doesn't tell you it's going to happen. It tells you it's most likely going to happen. And there's a difference there. There's a big difference because most likely means that there's a chance it doesn't work. A level doesn't work versus going to is essentially a guarantee. No guarantees in trading and investing. I think we're all smart enough to realize that at this point in our careers. Even if you're a newbie, just understand there's no guarantees. Okay, on silver, folks, it had a good bounce last week. I'm on the weekly chart to show that, but if we go to the daily, it's basically forming the same two sideways bars as gold is doing. The question here is, notice where it's forming. I gave you this as resistance right here, right? So you can see these three candles, and then you have two candles on this side. So it's basically deciding, does it want to go down or does it want to break back up on silver? We don't know yet. We're watching to see. Oil continues to hover here. You still have a little bit of an inverse head and shoulders. So I would give this more of a neutral to slight bullish bias candle. It hasn't broken the neckline yet, which is the trigger for the head and shoulders to really play out. This would be this trend line here. So if we break above 62.40, then it's in play for probably a move up to maybe as high as $68, $69 a barrel, maybe even as high as 70. Who knows? Maybe right up there. That would be a nice little move up. But right now, until it breaks this line, it's not in play. It's just a formation, which is great. A lot of people get overly excited for inverse and head and shoulder patterns when they're forming. It's good to take note of them because you want to be aware. But until it cracks that neckline and closes above or below, depending on if it's an inverse or a head and shoulders, that's where it triggers. That's where technically you want to make the trade because that's where the highest probability is that it's going to play out to target. All right, by the way, last week we saw Meta playing out perfectly to target of that head and shoulders. And again, you can see even on Friday it came in. It looks like it's bouncing just a little bit today. Natural gas here, folks, nat gas. This is your weekly chart. You can see the breakout has occurred. We did see a nice move. If I flip over to my daily chart right here, let's refresh it. You can see nat gas was continuing to move up. It stalled out a little bit here. But again, this is a breakout. I mean, it is what it is, right? It never retraced enough for me to get in on this trade. So that's okay. It's just the nature of the beast. But nonetheless, this is a breakout. I would say upside favors around $4.95 to $5 potentially on this chart, which would be this pivot high right here. You can see this high here is your level. Right now, you're kind of dealing with this zone. If we draw that across, you can see these little highs right in here and right here. That's why price is kind of struggling there. But if we get through, you're going to about the $5 level on natural gas. Bitcoin, guys, Bitcoin could be in trouble here. It's remained below that key trend line that I've given you guys. So if we look at this was that trend line. Notice how, again, you continued to hit it, right? Hit it here, broke down resistance, and then it closed above. But I hope we're all on the same page, unless you're brand new with my trading game plan, that a close above once you confirm below, don't get fooled. That's institutional money trying to fool you. Okay. All right. They will do that. They will close something above and everyone's like, oh, it's a breakout. And they go long and it's like, oops, it just got taken right away from me. Essentially, probability when you confirm below a level like Bitcoin and you close back above, probability is like 50-50, 60-40 that it's a real breakout. Once it confirms back above, 75-80%. So, I mean, there's a huge difference there in success rate, right? And so you always want to be aware. And here it closed above, it never confirmed. And sure enough, the rug pull came, we came right back below. And now you're inching down a little bit here. So the question is, are we still headed for this next target? I still think we are. Obviously, support will be around 100,000, just below 100, right around 98 first. But I could see us going all the way down to 93 to 95,000 before we get a little bit of support. ETH is breaking lower, guys. Look at this. It could be on the verge of closing below this major trend line. Notice this trend line here. All right, we are below currently. Remember, we have to see a close below with a confirming day tomorrow. And then we could say, okay, probability is now dictating a move to this level around 2750, 2800 on ETH. But again, this is a little bit of concern. If you're a bull on Ethereum, This is a little concerning that it's below. Let's see if it can recapture and hold this upsloping trend line. Look at the beautiful, let me just get rid of this target line because I just want us to marvel at how amazing the chart really respects the trend line, but it also gives us a very defined level when it actually breaks. And that's really what technical analysis is all about, is as a technician, probabilities, every candle you get, probabilities are shifting slightly. It may go more in your favor or it may go less in your favor with the next candle formation, right? Or the next candle itself. And we as technicians, we always need to be reliant on the charts, not our personal preference. Like, so if you're like long ETH, you can't be like, oh, well, I'm just going to go with my emotion and just say, you know what? No matter what ETH does, I'm just long, or I'm a hodler now because I was a swing trader, but now I'm a hodler because I really want ETH to go up. You can be a hodler, but just start out a hodler, right? The idea is when the charts signal, and they haven't yet on ETH, remember that they haven't confirmed yet, but you have to go with probability. Probability is my fastest way of how I got to be a multimillionaire. And I want you guys to start thinking that way. Think logically right up here. If you think logically, you will make decisions based on probability, which means success and profits in any type of market, not just bull markets. Everyone can make money in a bull market. The question is, can you make money in a bear market as well? That's the question. You guys have a great day. I've got to get to my trading room. Thank you so much for tuning in. Hope you enjoyed that SMH chart, the 200 weekly moving average. I think that is remarkable to see it at 102% above that again. And what would happen the last few times we saw the correction. Go have a great day, guys. I'll talk to you soon. Take care.